Hi, everybody. This is Alan Elman, the Blue Collar Investor, and welcome to this video titled How to Set Up Our Monthly Option Portfolios Using BCI Reports and Spreadsheets. Over the last 18 years, my team and I have created a myriad of products and tools to help facilitate setting up our option portfolios, giving us every edge possible to achieve the highest possible returns. In this video, I'm going to give you an idea as to one of the ways we could utilize our spreadsheets and our reports to achieve these goals. Okay, let's get started. In this video, we're going to first determine how much cash is available and how many securities are we going to use. Now, this is something that one size doesn't fit all. I mean, we have members investing 10 to 15,000, and we have members literally investing millions. So obviously, there's a very wide range. But everything that I'm going to tell you in this video can be applied specifically to your situation. Now, what I'm going to use is a portfolio that has $150,000 cash available. Again, it could be a lot less and it could be a lot more. And we're going to use 6 stocks and exchange traded funds. Now, the reports that I'm going to be used, which are all, by the way, included in our premium membership, are one, the stock screen and watch list, which we provide to our premium members on the weekend. My team starts working on it when the market closes on Friday, 4 p.m. Eastern Time. We're going to select 3 of the 6 securities from this list. Now, we also are going to use our weekly exchange traded fund report, which comes out midweek, and we're going to take 2 securities from that list. And finally, our blue chip or Dow 30 report of the best performing Dow 30 stocks, which comes out the week of expiration of the monthly contract. So that's a monthly report. The other 2 are weekly reports. And we're going to take one stock, one Dow 30 stock from this list. So there you have it. 3, 2, and 1. We're going to choose 6 securities. We have 150,000 available, and that is our starting point. We have to identify that before we can figure out how we're going to establish our portfolios. Now, those are the 3 reports. What about the 2 spreadsheets? Well, first, we're going to use our portfolio setup spreadsheet. This is part of the CEO package. I'll briefly allude to that at the end, and I'll provide links for you to get more information on these packages. But the portfolio setup spreadsheet will help us determine the best way to allocate the cash per position and also to make sure that we're appropriately diversified. So that spreadsheet is geared to cash allocation and diversification. Once again, throwing the odds in our favor from every possible angle. So those are the spreadsheets for that. We're also going to use the Trade Management Calculator, or TMC, to calculate our initial returns, so you can get an idea as to our starting point and some of the possibilities using covered call writing with our option portfolios. Of course, you can also use these for cash secured puts. All right, let's start off with stock selection. I told you we take 3 from a stock screen and watch list. And here I've decided what I did for you was highlight in the brown rows the securities that I selected for this video. And you can see we went with Dycom Industries, Futu Holdings, Tapestry, those 3. Now, these are all elite performers from fundamental, technical, and common sense perspectives. You could see here that Dycom and Futu have industry ranks of A. The only thing slightly average of these 3 was Tapestry's industry ranking as of 7/14/25 was ranked C, average. The week before it was ranked B. Otherwise, everything else is elite. Mean analyst ratings, which is 1 to 5. You could see these are all between 1 and 2. The on-balance volume, more cash flowing in on up days than down days, all bullish there. You can see the earnings report dates where the red arrow is, do not interfere. And these securities have been on our watch list for at least 2 months. So that also shows some strength. All right, so those are the three we selected from the stock report. Now let's move on to our exchange traded fund report. And these are ETFs that have outperformed the S&P in both 1 and 3 month time frames. So that's how they're sorted. You could see this column over here that I'm highlighting with my cursor shows the 1 month price 1 month price performance of these securities compared to that of the S&P 500, and these have all outperformed. They also have relative strength rankings of 60% or more and adequate liquidity as well. All right, the two that I selected, Spider Technology, XLK, and Spider S&P Metals and Mining, XME. So we have three from the stock list. Now we have two more from the ETF report. We need one more, folks, and we're going to get that from the blue chip or Dow 30 report. And of course, I couldn't resist from all these selecting actually the top performer in the last 1 month, where NVIDIA was up 6.75% compared to the S&P, which is up 0.89%. So I selected NVIDIA from the blue chip report, and that would make security number 6. All right, now I'm going to give you a little warning. The next screenshot, you're not going to be able to read it all, but I'm going to give you an overview of the screenshot, and then we'll dig in, and you'll be able to read everything from there. Okay, so here's our BCI portfolio setup spreadsheet. I use this all the time. You're looking at an overview. I know you can't read anything, but let me give you an overview of this spreadsheet. In section 1, you enter the amount of cash available, the number of securities, and you also enter the expiration date, and it knows the current date, and it will also give you, you can see in these yellow cells here, it'll give you how much cash our guideline is for keeping in reserve, not spending it, in other words, so you have some money set aside in case you need some exit strategy integration. Section 2 is just some instructions on how to use this spreadsheet. Section 3 is your initial entries. So you enter in the blue cells the ticker, the price per share, the industry, and the white cells will auto-calculate. Now, let's say at the bottom over here, it shows you, well, you know what? Based on the spreadsheet, we've spent too much or too little money. We have to make adjustments. Well, this section 5 will allow you to make some adjustments, which you'll see how we do it in a moment. And then section 6 will give you your final amount of cash spent and also the cash reserve. All right, now let me show you some screenshots that you actually can read. In section 1, we enter, well, these are for the August 2025 contracts, which expire on August 15th, 25. When I made this, there were 33 days until contract expiration. Here's the 150K we said we'd start with and 6 securities. Well, the spreadsheet calculates a guideline of 3,000 to 6,000 in cash reserve. Could be a little less, could be a little more. Keep in mind, once we start selling options, we're also going to have cash from that. So it's a little lower, it's okay. If it's a little higher, it's okay. Now, let's go to the section on the bottom left where we get our initial returns. And what we do is we put in the ticker symbols all the way to the left of the securities that I selected. Okay, these are the 6 we went through in the 3 reports. The spreadsheet will calculate, well, 150, 6 positions. You're going to put in approximately 25K per position. In these blue cells here, we enter the price per share, and it will calculate how many shares we could buy for $25,000. And then it will round it up if it's above the 50, or it will round it down if it's below the 50. And then based on that, how many contracts we're going to sell. But in the initial calculations, lo and behold, we've spent $165,231. That's 15,000 plus more than what we actually have. So we're going to have to make some trade adjustments. Very easy. Instead of 3 contracts, and you could do this however you want, but the way I did it was instead of 3 contracts of Tapestry, I did 2. Instead of 3 contracts of XME, I did 2. right? I also want to show you that there's a column for entering industry segments, so you make sure you're not duplicating and too heavily weighted in any one industry segment. So we're going to make these adjustments, and here you go. So I circled for you, instead of 3, we're going to do 2 of those. Instead of 3, we're going to do 2 of those. And then lo and behold, we've spent 148,074, leaving us a plus reserve of 1926. And that's a little bit less than the low end of the range, 3,000. But remember, we're going to get way more than that in option premium. So we are good to go. This is going to be what we print out and take when we're ready to start executing trades on whenever we're doing it. I do it Monday morning, somewhere between 11 and 3. Usually we're closer to 11 when I enter my trades. Okay, so this is the BCI Trade Management Calculator spreadsheet, which those of you following us have seen this, I don't know how many times, but this is a must. I can't be without it since we developed it, and it allows you to do everything. So I'm going to show you a broad perspective overview of the spreadsheet, and then I'll show you a closer view. So in section 1 for covered calls, we enter our initial trade. In section 2, we get our initial returns, initial, per trade, and then in section 3, per portfolio in these green cells here. Section 4, which makes this the most unique spreadsheet available, there's over 20 different exit strategies in this spreadsheet, so you can adjust your trades if those opportunities arise, and then get your post-adjusted returns per trade, and in section 6 in the green cells, per portfolio. Section 7 offers you a trade journal where you can make notations regarding your trades. It's just a wonderful learning tool that will make us all better investors. All right, so what you're going to see coming up is the section 1 where we enter our trades, section 2 where we get our initial returns. All right, that's what you're going to see in the remainder of this video. So in section 1, you could see all the way to the left the 6 securities. You could see they're in different industry segments. We entered the trades on 7/14, and these are all for expirations on 8/15. Okay, so a little bit more than a month out. You could see we entered the price of the stock. I used all out of the money strike prices, and these were the option premiums when I created this, the PowerPoints for this particular video, and the number of shares were based on the portfolio setup spreadsheet. Now, here are the initial returns. The spreadsheet tells us in that red oval, if taken through expiration, there are 33 days to expiration. Now, break-even price points are in these yellow cells, but let me address now the meat and potatoes of this spreadsheet. And that's in the brown cells. We have our initial returns, which go from 1.64% up to, let's see, what's the highest here, 474. And the annualized returns range from 18% up to 52%. Now, you'll notice in these purple cells, since we used out of the money call strikes, that there's an opportunity for an additional 1.77% to as much as 5.82%. So I think you could start to see from these calculations the possibilities, and this would be in normal to bull markets since we used out of the money covered calls. I would favor in the money covered calls in volatile, bear, or uncertain markets. Now, the spreadsheet will also give us our initial total portfolio trade calculations. Here we go. It calculates total of 10 contracts. The portfolio setup spreadsheet showed us that. And the initial returns came to 46.65. Remember, I said it'd be way more than 1,000. 46.65. Now, how much cash upside if the price of the stock moves up to or beyond the out of the money call strike? We could generate another 52.80 in the best case scenario, leaving us pretty close to 10 grand, 99.45 for these 33 days. Now, how much capital did we invest? 147,720, which resulted in a flat return with no share appreciation of 3.16%, but the possibility of another 6.73%, again, if all the shares moved up to or beyond that out of the money call strike. So that would be the best case scenario of almost a 10% 33-day return. Let's summarize now. Setting up our option portfolios can be greatly facilitated by using the BCI spreadsheets and reports. In this particular video presentation, we use the following BCI products: the stock screen and watch list, the ETF report, the blue chip report of the Dow 30 stocks. We use the portfolio setup spreadsheet, the trade management calculator, and you can get more information on these tools by going to our website, thebluecollarinvestor.com. Go to our store and click on the store and go to best discounted packages. Now, if you're interested in getting absolutely everything BCI has to offer at the best discounted price, have a look at our CEO Total package, because that has everything and gives you the greatest discount. Now, let me just add this. Once these trades are executed and we have our initial returns, we then must be able to initiate our exit strategy skill set if it's indicated. Sometimes we don't have to do anything. But if the price of the stock turns against us or even ends up way better than anticipated, there's always ways we could mitigate losses, turn losses into gains, or get higher gains than even maximum returns. So we have to have the skill set of stock selection, which if you're a premium member, we do that for you, option selection, and then, of course, position management. Ladies and gentlemen, that ends this BCI video, how to set up our monthly option portfolios using BCI reports and spreadsheets. I'll include some links of some of the products and tools that I discussed in this video so you can get more information on it. Folks, I want to thank you so much for taking the time to listen to and watch this video. I hope you enjoyed it, but most importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.